A bookcase. It proves that I'm serious about presenting, and it's okay to accept what I say. Let's get right into this. This is the last week in the main account, and we lost money. We lost about £1,300, so we went from 16.3 to 15. This is the money in the account right here. That's the trades we're sitting in. So these are the open positions. Right now we're sitting at a 500 loss. So if we closed out the account right now, we'd end up with £15,000, which is up, but we're down over the week. And this is normal. We're going to look into that in more detail in a minute. This is the full account summary. Most of the time we're just going to look at the summary, but I just did want to show you the detail of the account. So this is the main account. It'll always be this account here. And these are all the individual trades, the profits and loss of all the individual trades. And you can see there's lots of gains, lots of gains, lots of gains. And then at the very end, we have some very significant losses. And so we end up minus 785 on trades for that week. Now, these are the expenses in the account. So for example, when you hold a position overnight, you incur interest sometimes, or you're paid interest sometimes. But the interest is small compared to the profit and loss of trade. There's a profit from trade, profit from trade, profit from trade, profit from trade. Here's the end, loss, big loss, big loss, big loss. And that's where we lost our money. So this is the detail of the account. But most of the time, we'll just be looking at the summary. So the summary at the beginning, when we started this account, it was 12.5. We're now at 15. So overall, that's good. But it's only 4 weeks in. And as I'm going to show you, that doesn't mean a lot. That doesn't prove anything. I haven't proved a single thing yet. This is the Euro account. Started, where's the start date? 4/19, end date 5/8, so it's about 3 weeks. And there's our beginning balance, our end balance. We're up. We gave back a little bit of profit during this week, but we actually, overall, we made a bit of money. We're just in a loss position. That's interesting. Username Davian Rockwell. I don't know why I put that in. This is the experimental account, and I'm not going to be showing you this again. And the reason is I have several experimental algorithms that could potentially take over from the main account algorithm. But if I say do 100 of these, one of them is almost certainly, even just by accident, is going to make a lot of money. And so if I then pluck the best performing one out of 100 and then go, look, my algorithm's really good, I basically haven't proved a single thing other than statistics works. So right now it's up, but again, it's only 2 weeks old and it doesn't mean anything. And it's the last time you're going to see this. Okay, this is the profit line from the main account. As you can see, here's where we gave back some money. We were around here at close last week. The fact we're in profit, again, doesn't prove much after 4 weeks. This is the Euro, same thing. We gave back a bit of profit. And again, it's only 3 weeks. And again, doesn't prove much, which I'm about to get into. And this is the experimental account. Last time we're going to see it. It went up at the end. Okay, a viewer asked me, how does this perform? How does this algorithm perform on historical data? So I'm going to run it pretty much through 2019, all of 2019 and into up till date. So a year and a little bit, year and a quarter. We're starting the algorithm now and it initially makes some money and then it immediately goes into losses. And if I run it forward a bit more, it made some money, so that looks good, but then it loses money. And this is typical, this is normal for this algorithm. And sometimes the losses can be frightening, especially if you end up, if I started here and it just gone straight down, it would have been terrifying. We'll just run it forward and see. I'm not exactly sure what it's going to do. Let's see. Yep, that's not looking good. You can see down in this area here, an investor would be not a happy camper. This is just not looking good. It pops up a bit and then it starts going down again. And if we continue forward, okay. You can see there was a major loss and then suddenly it took off. So now we're in profit, finally. But we're in January. It's January 3rd now. We started in December. That's about a month. So we've got about a month of data there. We'll just run it forward a bit. Is it going to go positive? No, it's gone negative again. So, and this, yeah, typical algorithmic performance. As you can see, all the slopes are downwards. All the slopes are downwards. This is not a comforting sight for an investor. We'll run it forward some more. Let's just see how low it gets. And so now it's, where are we? We're in February now. February 5th. Is that right? Yeah, February 5th. And we have not made a dime. And let's just see what happens. And there we go. Now we're in the money. Finally, we're in the money. Now, does it come back down again? That's the question. And apparently not. And this is the thing about the algorithm. It tends to make money. And the reason it does is because I'm using, the catchword is artificial intelligence, but basically I'm using evolution, which is one of my specialties, one of my PhD specialties. Now, if I run this right forward, so I'm going to we are now in March of last year. I'm going to run it till May of this year. And here we go. I'm just going to run it quick. And you'll notice it flat. It's sort of flat, goes up a bit, and then we end up looking quite good. Here is the scary time. This is where we were panicking, right down here. That's where we ended up if we just relax and let evolution do its thing. They're different. When you evolve something, you never get the same thing. Never. I could do evolution on the exact same data using the exact same technique, and they will perform considerably differently. And some of them will perform very poorly indeed. This one does quite well, and it's a candidate for taking over the main account if it continues to do quite well. But as you can see, this is what it looks like. This is how it looks like over the long run. And if you remember what it looked like in the short run, you got to remember when it goes down like that, that's, you just got to ride it out. You got to ride out the ups and downs, because eventually the ups and downs will be all in the black. But it certainly doesn't feel like it January 29th, 2019.
Okay, last week I showed you the best performing hedge funds in the history of the world. But Warren Buffett actually has very little confidence in managed hedge funds at all. In fact, he made a bet that no one could come up with 5 hedge funds that would outperform the S&P 500, which is a fund that is not managed at all. And he won. And here's the actual data from this bet. And he continues. He says hedge funds actually, for the most part, don't perform. They simply don't outperform the market. So then why do hedge fund managers make so much money? His argument is it's basically sales. They're getting paid for very good salesmanship rather than very good management. A lot of people have made a lot of claims about how they can get returns on the market. Now, economists argue that the market is efficient and that you actually cannot beat the market over the long run. It's not even possible. But of course, this isn't correct at all, because Jim Simons managed a 60% return over 20 years. And Jim Simons, a mathematician, doesn't believe the economy works the way economists say at all. In the short run, supply and demand do drive price the way common sense says. However, in the long run, entirely different forces are dominant, which I will be demonstrating in the future. And so that's partly why I'm going, over a year, I can make a profit. A day, that's a different thing. A few weeks, that's not a long enough time.
Okay, last week I started the video by sticking my camera out the window and just letting it pick up all the natural sounds of nature. And the reason I did that is I want to ground these videos in nature. The reason behind that is nature is what supports human beings. It's the first starting point. It is the foundation. And this is what I mean by that. If we do not have excess food, we do not have leisure time. If you do not have leisure time, you cannot build or improve on things. You need leisure time to do everything. It is the first point. Now, nature supplies the leisure time. If you watch animals, almost all animals spend a very great deal of time doing nothing. They're lazy. And we're lazy. Biology makes us lazy because normally the day-to-day life creates the activity necessary to keep you healthy. The anthropologist Solons, when he studied the hunter-gatherers in Australia, he discovered they only worked 3 to 5 hours a day, and the rest of the time, leisure or social activity, family, fun, that sort of thing. Nature is the foundation that feeds us, that gives us the excess food, that gives us the leisure time, that allows us to hunt for new technologies, develop new technologies, to explore, to do everything other than looking for and eating food. Therefore, I think it's the most important system associated with the well-being of human beings. And that's why I want to start every video with that. We are going to come back to this at a later date in a much more profound way. But I just wanted to touch on this. Well, thanks for watching. Hopefully I will get better at this as time goes on. This one's been a little chaotic because there's some events in my life that had stopped me from making the video when I wanted to. I had to kind of rush this forward. So I apologize for that. Hopefully it was interesting enough, and I hope to see you next week.